Great. For people just joining, we're just going to hold on for one more minute, just give everybody a chance to get on the call before we kick off. Alrighty, let's kick off. Delighted to be hosting this webinar today, and delighted to be doing it with Dost. I'm from the MBAT side, and we're going to talk about how we move from invoice to payment across AP, AR, and cash management. And the basic thing that we want to talk about is how most finance teams really run that in three separate operations: AP, processing invoices, AR, with the remittances, and then Treasury and cash management is left trying to piece that together, often with a cash position that's already a bit out of date. And so Doug and I are going to show you a little bit of what that looks like, and when those things actually work together, and how quickly you can get there. So I'm Theo Wasberg. I run the MBAT business in the UK and Ireland. I come from a finance systems background, spent my whole career in the ERP world, in the software and implementation side, and was always bumping into these cash management challenges that come up for businesses. Doug, perhaps you want to introduce yourself as well.
Yeah, hi, thanks, Theo. Welcome all. My name is Doug Embleton. I look after the strategic partnerships and the value consulting at Dost. So we're really interested in working with sort of mid and enterprise companies in really looking how we can best automate and remodel the finance function. And from my point of view, I've sort of been involved in the last 20 years, like Theo, with ERP and finance systems. So I have a lot of experience around the core financial and ERP platforms and the challenges of this disparate AP, AR, and cash management that Theo describes.
So I think before we get into the solution, and we're going to spend a bit of time talking about our respective areas of expertise, I think it's important to frame what it is that we're talking about, and it's fair to say that the challenges that we at MBAT and Doug on the DOS side bump into are common challenges across businesses and things that we see routinely, and they're kind of cross-functional, or they cut across multiple areas of finance. So, Doug, maybe you want to start on the AP side, and what the struggles are that you see most often.
Yeah, most certainly. I think, as you point out, there's sort of, if you were sort of coining it down to sort of four areas and four AP things that are very common, these all stretch from, the ideal position is to know exactly, what is your cash out and your cash in position. And certainly with the cash out, that varies greatly because of the disparity of how companies manage their purchase to payment process. And obviously AP is a very essential part of that. But again, one of the main struggles is obviously with different types of supplier invoice processes receiving, whether that be from portal or from email or from scanned images, EDI or e-invoicing in pendant. The key is that, it's getting the correct information into the correct process so that the AP process can be very much touchless. And that's one of the challenges that is very common with all people, because they tend to have some kind of solution, but they don't necessarily have it connected together. So that's sort of the first point. And I think, also if I look at my client base and prospects we talk to, the whole second stage is really around slow invoice approvals, the automation of those approvals, because of, upstream there may be very strong direct spend procurement control, but then there's a whole raft of indirect spend, whether that be utilities or internal spend, that is actually budgeted, and invoices arrive, and actually the first sign for the AP team and the commitment to the business that they need to pay is long after the products and services have been supplied, and then that causes cash flow and other issues downstream. And of course they have to enter this either manually or part manually, because different workflow tools deal with different types of invoice processing and automation. And then I think, obviously, depending on the type of business, the third is very common, depending on whether you're matching PO, goods receipt, and line level matching, and or indirect spend, because unless you have the ability to automate this, you spend many days of full-time employees working hours just trying to deal with the chaos that's been created upstream by poor procure to pay. And so it's a balance of how we do this, but of course that means that those invoices could be sitting in inboxes, they could be coded and matched, but then going out on email without an audit trail to resolution. So of course that covers all sorts of third-party matching errors. So that's sort of a key third area. And then if you look at late payments, this is a combination of upstream the other 3 points. So really, if you think of, by the time the invoice is processed and it's coded and matched and query resolution and exceptions have been handled, the payment window's very much almost closed. So you then either struggle with supplier relationships, or you can't take advantage of discount or any contract buying that you're doing. So I think they're the main sort of 4 areas that we come across regularly, and obviously on the AR side you can pick that up, Theo.
Yeah. Well, and I like what you're saying about things that are upstream and downstream, because in many ways it's not just the workflow; it's all the stuff that happens around the edge and interconnecting that across the business, and that obviously applies on the AR side as well. And people will be just as familiar with that. You've got remittances arriving from from customers in every format, and people are having to read and match those and process those in the business. And so inevitably that leads to payments that sit unmatched and collections being chased on invoices that maybe have already been paid, and you land up with a messiness due to the real world kind of ambiguity there. And you've got Treasury, or the cash management component sitting at the end of that, with a cash position that's maybe behind, with a view of bank accounts that's maybe not up to date, with there is a data lag between what's happening in my financial institutions that I interact with and what's happening within the core sort of finance processes. And so that's a rolling kind of challenge for businesses. I think. Sorry, Doug, did you want to come in there?
Yeah, I was just saying, I think if you look at the root cause, this whole upstream and downstream is where the disconnection occurs. And again, this is sort of partly because companies struggle to have sort of tertiary software that covers all the processes. So you'll have one cash management system, you'll have a treasury system, you'll have another third-party system for scanning, another third-party system for workflow. But of course, when they're segregated, the whole connection of knowing what is cash in and cash out and what is upstream, and just simple things like some of my clients and suddenly realize that their visibility, if they put indirect procurement in place to capture all the purchase accruals, they actually can see that they need £150,000 on day 2, not on day 27 when it's due in 4 days time. So this whole cash management which is the problem we're solving end to end, is really massively beneficial for this cash control and managing the growth in the business, and obviously ensuring the best profitability, which is really important.
Yeah, 100%. 100%. Well, look, but perhaps then we start on the Dost side and talk about how you really get that data and where you bring that in from.
Yeah, absolutely. So the Dost proposition is very different to our competitors. So without getting too technical, the important thing is that we use a VLM model, which is a visual language model. So currently, when you receive documents, whether they be XML, e-invoices, whether they be PDFs or images, the actual extraction extracts the correct information, but it is based around core data fields. So it could be the invoice date, the PO number, the net VAT gross, etc., etc. So what's different to start with is that when we extract the data, when we receive, we have one receiving portal. So whether you're sending it any type of supplier invoice, we actually interpret the whole of the document and read everything on the document. So this allows us to do some very, very clever extraction. So there's no manual intakes is the key. There is no templates whatsoever, and there's no configuration per supplier. So when our AI and the visual language model extracts, and I'll just give you an example, you could receive a utilities invoice for electric from a supplier, and typically you would extract the standard information. But actually, when you start to use VLM, you can actually then read the MPAN numbers. But at the same time as reading the MPAN number, you could look at the contract database to say, on this invoice, is this the correct value for indirect spend for our utilities? So it just means that the whole point of getting quality data into process with all the facts means that everything becomes very fluid and consistent. And with it being self-learning, once that is learned for the first time, the AP team don't need to see that invoice ever again because it goes into flow straight away. So that's sort of a key thing on what happens once the data is extracted. And then obviously where three-way matching comes in, Dost reconciles each invoice against the purchase order and delivery note position. So at a very basic level, because of, again, this visual language model, we can actually start to cascade very complex matching and do simple things like if an order is for 100 and we receive 2 goods receipt notes for 50 and we're billed for 60 items, again, you don't need to manage that exception because the system automatically will go, actually, I've got an order, I've got the supplier details, I've got the current position of goods receipt and the order numbers, and I've got the invoice, and actually there is a delivery variance. So actually, I'll just route it to the purchasing or the goods inwards to either request receipt or to ask for credit. So it's all about removing the need for what has become commonplace in lots of organizations, that the AP team just spend hours and hours just doing admin work between themselves, trying to work out upstream, because this hasn't happened, what do we need to do downstream? So that becomes automatically done.
Can I ask you about that, because I guess customers will be on a spectrum of maturity on that stuff, from very, very manual to having some kind of tooling in place. What do you see in the market? What do you generally see from customers in terms of maturity levels?
Well, it depends on markets, size and volume of invoices. But I think you've either got very good header level extraction, and they just they can receive the invoice in, match it to the gross values. But when you look at more complex than volume, there's a lot of other things that need to be audited and checked. And again, what happens with this sort of role in automated workflow is that the real key is that upstream, as these problems occur with disparities, the whole objective is to actually feed this back so you can start to prioritize working with those suppliers. So if you can free the AP team so they're not doing admin work, they actually can look upstream and just say, this supplier consistently does not put this on the right invoice. But also with learning, with this sort of advanced AI learning, you can do clever things like a description on an invoice from a supplier may be different to the SKU description on the purchase order from you requesting the goods. So again, you can start to automatically map. So as documents come in, they can resolve themselves with self-learning, which is the really important factor.
Okay, got it. And then,
And obviously on the
yeah, sorry,
AR
go on.
side, I think that whether it be extraction or AR for remittances, it's very messy. So whether it's DOS or MBAT, it's the same principle. So if we look at any customer remittances arriving, we can read them, we can extract the payment details, and that data can go directly into the reconciliation. So again, no manual data entry, nobody's spending time opening up emails and trying to start the process off. So I think that the point that we're trying to get to is if we provide a single platform, a single UI, and a common experience, it suddenly becomes these separate sets of data that are disparate suddenly become joined up. So then that just leads us on to have better cash controls.
Yeah, that really cuts at something I mean, this is true, I guess, across all finance systems, right? We're just um, talking about ARIP and cash today, but the sum is greater than its parts when you can get these systems to talk to each other and unify the interface and unify the flow of data. Because the more that you isolate those, the more painful the touch points become across them.
Yeah,
Good. So
absolutely.
look, maybe if I talk then about the MBAT side of the house. So MBAT obviously is more of a treasury management tool and cash management.
Yeah, I
Um,
think it's important to walk through it. Yeah.
yeah, and we're coming from a point where picking up from yours, that we've now got clean data sitting um, in the ERP. But often then what's happening is that, or very often people are going to their banks, they're manually having to manage that data flow from multiple banks into an ERP, and then work from there. So you've already got all of these very, very challenging touch points. And so on the other side of the relationship between the ERP out into the world of all the financial institutions it interacts with, we start by trying to clear that data up and create a live connection between the ERP and the banks. And that means that data flows in real time, that the cash positions are live, and you're not working. We've got, I've spoken to customers on MBAT now that have come from a position where they've got several days of lag time in terms of their cash position, or in terms of um, where they're coming from. So first thing is clear that up and remove all the CSVs and the manual work.
Yeah.
The second thing then becomes about the reconciliation, because the reality of all ERPs is that there's a limit to how automated that bank matching process is. Right? So people will do these with traditionally very tightly parameterized rules, and those rules tend to break down a bit when they're met with the real world messiness of how people pay. Right? You get somebody consolidates a payment of two invoices in one, right, and a rule will fall over at that point, and that's the spillover of that is lots of manual work for a team. And so by using AI and using a really powerful reconciliation engine, you can automate that away, right? We're in a world where there's really no need for people to be spending a lot of their day just doing the manual matching of what's in the bank with what's in the ERP. And the AI is really effective there. And it's the move from, most people are doing sort of 30% match rates in their ERP, and the 90 something percent that you can get to in this new world of AI tools. And you can surface the discrepancies, right, in a way that you just couldn't before, right? You can
Yeah.
you can handle a level of complexity that you just couldn't before. And that 2-to-1 match is the the example I like to use a lot, right? A rule just doesn't like it if you pay two invoices in one go. And AI can see through that. It just runs the balances, and that's not a complex task for AI. So the world's really changed there.
Yeah, yeah, and I would like to also just support that on the point of view of AP and AR for payments, because what we get feedback from lots of clients is that they have AP and that will go through approval to posting, but actually the payment position doesn't become apparent until you've posted.
Yeah.
So again, the important thing with this single platform and end-to-end process is that as soon as a client, a supplier sends you an invoice, we actually will categorize it right the way through to when it's due and when the payment is due. So now, if you control that downstream, that's fine with disputes and whatever. But actually, you get a true position. So when you actually have got 1,000 invoices that are in flow around the business, you actually still know the purchase accrual position, the committed cost, and you know what you've got to pay. So I presume when we link this together with AR, this obviously gives us this excellent ability to do more accurate forecasting of cash, because we've
Yeah.
got all of the details for cash in and cash out and expected payment dates.
Exactly, and that's really the last piece of the puzzle from an MBAT perspective. Well, I suppose that and
Yeah,
payments. But if I start with forecasting, it's the best forecast data obviously is my ARAP ledger, and I want that to be in a state where I can push it live into a forecast and move to a world where I'm not downloading an ARAP ledger that's maybe a little bit outdated, trying to consolidate it on an Excel. I'm using a system where that data is pulled live and that data is accurate and well reflected. We enhance that though, right? There are things where there isn't an invoice sitting on the ledger to give you the forecast date, and if you think about bank fees or you think about payroll and pensions, perhaps that there isn't a data source that you can easily pull into a cash flow forecast for that. And you want to layer in some predictive analytics there. You want to say, well, actually we have a constant growth rate, or we have seasonality in this particular line item. And then thirdly, if anyone's ever built a cash flow forecast, you land up chasing people around for a little for their little bits that they need to input, and it lands up on email and the Teams chat, and actually really what you want is everybody able to collaborate in a document and fill in their bit. And so partly it's getting really good APAR data, partly it's giving some predictive analytics, and partly it's having a user workflow and interface that makes all of that dramatically easier and is held in a live way, and you can do forecast against actuals and all of the things that are really difficult to do when you do it on a static Excel. And
yeah,
then really
absolutely. Yeah,
and
no, most
then
definitely.
yeah. And then really the last bit of the puzzle is payments, because the other thing going the other way is that once you start exporting batches, it's another CSV coming out of the ERP, people logging into their 5 different banking providers, uploading a CSV. Classic challenge that everybody on this call that's working in an ERP will know is you export your XML payment file and everything gets marked as paid. It's obviously not paid because it hasn't gone out the bank yet. And you've got a data gap between what happens in your ERP and what happens in the banks, right? When the bank rejects something, somebody's doing the manual reversal, right? Connecting those systems means that data flows in a much better way, that it's live, that it's much more accurate, and you can coordinate all of that across multiple banks. You don't have to log in and out of all of these different portals and have all of the associated mess and headache that comes from it.
Yeah, absolutely. And I think just to add confirmation around that is that the gaps that are missing around the HR, the payroll, the other money that's required in the business. Again, we sort of came across this quite early, and so we built out a solution called Dost. So although all the people on this meeting will have Oracle, NetSuite, and other variants of ERP, that most of those platforms now are delivering what we call MCP servers. So what we have is, if we control the supplier in purchase to payment and the order to cash, which is the bit we're talking with that whole centralized cash management. When we look at Ask Dost, we then connect it to the MCP. So you can say, give me a cash flow forecast, which is an accurate one from MBAT with all of the known variables. But you can then say, go to the payroll and get me the details I need on extraction for the next 3 months of estimated payroll and where will their liquidity be, etc. So we do have this tool, which is sort of the move from people using third party, Claude, OpenAI, where businesses give access to their client, their customers, and their staff to upload spreadsheets, forecasts, private information to the business. So if you can imagine you have your own insights and analytics that is your own large language model, this gives you the control and what we call the observability. So if people want to assemble a forecast for a board pack made from X and Y, we control it all and it learns from its model, and it is only that company's model. So that's also another important part of why Dost is much more powerful downstream to connect all this segregated data.
Yeah, and it's a big part of why we partner, right? Because
yeah,
we both see AI the same way, which is that you've got to provide these MCP kind of connections, and you've got to surface this data in ways that people can use. I mean, maybe just to echo some of that, I've got a obviously data segregated, it's critical. I've got a customer where their treasurer consults their cash position, and he can do it from Teams. He doesn't need to go in the workflow to check what's in one bank account. He can just ask the system from his Teams account and say, where are we with that particular position? And the AI is clever enough to do that.
Yeah, most certainly. And I think that end-to-end visibility, regardless of your ERP, also, if you know your position out and your cash position, you're in a very strong place. But what happens upstream when you've got the MCP and the large language model is you can then start to really add value from the AP team, because you can start to give, categorize your spend and say, look, for legal services, what have we spent on a GL across this year? There's 6 suppliers, it's 1.3 million. How can we just simply contract 2 suppliers instead of 6 and drive £100,000 worth of saving? So there's a lot of visibility and control that moving this way gives you if you put Dost and MBAT together. And obviously you've got this powerful that you can connect it, natively into your current ERPs.
Yeah, 100%. Well, then perhaps just to round up, I guess what we've tried to do is paint a picture of how you can think about the end-to-end flow, much more than just simply the particular workflow for any individual piece of this, but how these more advanced tools like Dost and MBAT can give you not just visibility, but a flow around the ERP and through the entire life cycle of the actions and the movement of cash in the business. And the output of that is really dramatic for businesses. The management of cash much better, the accuracy of the data, the quality of the forecasting, and that's really really powerful. I perhaps should have set up at the top, but we're very happy to take questions. And so if there's Q&A, then we'd love to have it. You can request a demo from either of us using the QR codes here, or both of us if you'd like. We'll come and do it together. But very happy to take any questions. I don't know if you can. I'm just trying to open the Q&A box. I don't know if you're able to see there. Okay, so I've got one here about implementation times. So, Doug, I don't know, maybe if you want to start with this one, but how long does a typical implementation take for? The question here is, how long does it take to get Dost and MBAT set up and running? I don't know, maybe if you want to start on the Dost side.
Yeah, so Dost is very simple. If it's a native connector, The actual connection to like D365, NetSuite, and similars, ironically, is sort of under 2 days. So this is because we already have all the accounting dimensions and all of the vendors, the GL, the tax, the VAT, etc., available. So the actual native connection is very, very quick. And then typically a project to onboard and look at the approval matrix, look at what you're currently doing. But a typical installation is sort of ranges at a low level and low volume, sort of 3 weeks, so sort of 15 days, up to probably 8 to 12 weeks. But it's very quick to deploy, and that's sort of the use of the technology being able to achieve that.
Yeah. Okay. Great. Well, maybe then just to echo that on the MBAT side. So we have a pretty similar approach. The native connectivity into the systems and the ERP systems is something that we stand up in the space of a week. But what we do have, what takes some time is connecting up all the banks. Right. And anybody that's worked with banks will know that they're not always the easiest to work with. And so typically it takes an additional kind of 8 to 10 weeks to get all of that banking connectivity and, all of that banking connectivity in place and the data flowing nicely into the system. So most implementation takes sort of 8 to 12 weeks, depending on the complexity. We have another one here about limitations with ERP, which is a good question. So perhaps I'll start with that one. So from an MBAT perspective, we have open API integrations, and so we can connect to any ERP. We have these native connectors that are very fast to set up, though, for essentially everything in the SAP, NetSuite, Sage, and Microsoft worlds. So if anyone's using an ERP in those spaces, then it's really plug and play. But if people are on perhaps more legacy or other systems, then they can still use the system, but there's a little bit of integration work to do. Doug, I don't know on your side if there's any limitations on the ERP setup.
No, I think depending on whether it's header level or line level, there is a sort of a Q&A which says a super interesting webinar, but how do you handle multi-entity or multi-currency? So again, just to answer that point, because we look for the source of truth from your finance system, the setup and the entity and the model for tax, VAT, accounting periods, etc., is all brought across from the ERP. So they're always in sync. So that keeps that very compliant and under control. So that sort of covers that point. And then, sorry.
I was just going to say, Doug, maybe I'll add the MBAT side of that multi-entity, multi-currency, because almost by our nature, we're relevant for customers that are multi-entity, multi-currency. If you're a single entity with, one or two bank accounts, you're probably not a natural MBAT user. But the value comes when you're trying to manage a cash position across multiple banks, multiple bank accounts, across multiple entities in multiple currencies, and suddenly the complexity in quote unquote treasury spikes exponentially as a result. So we're built with this multi-entity architecture. I mean, I'd encourage whoever wrote that in just to use the QR on screen, and I'll show you, or someone on the team will show you. But we use this multi-entity architecture so that you can jump in and out of the entities. And there is a benefit to that, which allows you to really roll up and down the data. And so, if anyone's had to consolidate cash flow forecasts from multiple entities before, it's a pretty painful process. And that's something we do quite naturally in the system.
Yeah, and I think adding to that, just going back to the actual problem we're solving, is that if upstream you sort out the procure to pay process, this makes a massive difference to that whole MBAT cash management position, because often you're struggling to get visibility of what cash you need to pay out with cash you've got in. But also, what then happens is because you've got more time because you're not busy doing admin in the AP department, you can do clever things. So you can actually really look and say, well, actually, look, our top 7 sales ledger accounts is totals £3.7 million, but actually upstream the source of the products to pay, that we bill these suppliers is out of sync because we give 40 plus days for finance to these customers on the sale ledger, but we've only got a 14-day or a 30-day account on the purchase ledger. So it also allows you to start to really look at how you can either use cash if you've got extra cash to get discounts, or actually make contract spend and supplier spend in line with receivables. And so again, that's this whole thing of getting it properly connected together. So that was
Yeah.
the one point I wanted to bring.
No, it's a great point because so many of I guess both of our customers are coming at this from they're thinking about the working capital dynamics of their business and how that they can pull those levers and start to optimize what they do around AR, AP, and the overall cash management and liquidity that they're working with.
Yeah, absolutely. And it's when you connect procurement to finance teams on both sides that really the magic can happen. And that the most successful business I've worked with have understood that. So it's not a finance centric project AP. It's a purchase to pay centric. And because if you can control when and how you spend and how you buy downstream, it becomes very easy to get the cash and liquidity right. There was another message from Sam Reardon that just said, what does the implement process look like? Do we need IT involved? And I would say that there's two things. From an infrastructure, obviously these are rolled out on cloud and with all the relevant Azure accreditation and security. But again, IT need not be involved, but systems teams would need to be involved because of understanding the integration and the flow of data. But it's very, very minimal. And these are really what I would class as sprint high value business product projects for people. So they have a real impact on, an example, some of the clients that were growing exponentially, they put massive capability into the sales growth side. So their CRM and their ability for lead gen and closing business rocketed. But then on the finance function side, they didn't scale it. So they went from 10 million to 20 million turnover, but they had 4 staff in finance that then went to 8. And then their operational EBITDA stayed the same because they just hadn't got the procurement to pay related to the sales order to cash connected. And so this is why we can do this very quickly as sprint projects, but the impact on the profitability in the business sort of shows in the results.
Yeah, 100%. And I guess it's what's allowed both of us to scale so fast is that the ROIs on these is pretty clear.
Yeah,
and in a
completely.
world of AI, you can't afford to just linearly scale a finance team, alongside the business, and you can really quickly achieve those kind of
Yeah,
breakout capabilities in finance.
yeah, and I think the key with both of our applications, because I think that's the important thing, is we've got very strong software applications for accounting professionals, and the AI is just the extra bit, because without strong applications, there's lots of agents and agentic AI that's kicking around that just does a part of the process, but actually it doesn't solve that whole cash in, cash out, and the best liquidity position. And at the end of the day, what we're really trying to achieve is what is the lowest operational cost for a transaction in the business, whether it's a purchase to payment transaction or an order to cash. And if you can achieve that, then that's where everybody wants to go. And that's sort of why our 2 products were built out from that problem that ensues everybody.
Yep, absolutely. Well, look, I think, Doug, we've probably covered it, and hopefully
Yeah,
we've given people something to chew over and to think about how they think about APAR cash in their own businesses.
yeah,
Um,
absolutely.
if people want to see it, obviously QRs are on the screen, or just reach out to us on LinkedIn or through the websites, and we'll pick it up. But really, Doug, firstly, thanks for coming on and doing this with us, and always good to chat through how we both work together. And
Yeah, absolutely.
everybody that's joined, thank you so much for your time, and look forward to hopefully hearing from you and discussing some of this more.
Yeah, absolutely. Thanks everyone for attending. Really appreciate it.
Thank you. Bye bye.
Cheers now.